Hey everyone, the professor here, and let's talk about making some money with crude oil this week as we look at the price action. So the first thing I want to do is kind of establish what we normally do are the floors and the ceilings based on current pricing, okay? So we're going to go ahead and mark this up here. And what I like about this new trading view tool is that you can kind of just add some notes right here so it's very clean. So what I want you to do is that I'm doing this. Okay, go ahead and add this to your charts as well so you can have a fully completed chart as you go through. Okay, and so what I want to do next is I want to go ahead and mark up this floor right here. And so again, this is going to be, and I don't want it to be in caps, this is going to be a monthly, okay, support level. Okay, well, we had a nice bounce, so we can kind of play within that field right in here. And let me go ahead and switch this to remove the caps. Okay, so now we start looking at our chart here and we can see, okay, we have our monthly resistance up at the top and we have our monthly support. So let's drop now over to our weekly, because again, we're going to see different levels happening here throughout the chart. Okay, now we can see that we had a floor here. We had a bounce from this level. And if you look right here, let me grab the little glass here. Okay, we can see we had a bounce there and we had a bounce there just to show you how I'm marking up these levels to start the week. Okay, and we adjust these as we go. So again, all you need to do is double click. And now this is going to be a weekly support level right here. And again, we did see price reject this level on multiple occasions. So we're going to mark this right here. And we're going to go ahead and add this as a weekly resistance. Okay, so what's nice about this new tool here is that you can kind of begin to look at this. And again, if you get price action coming down here and you think, well, I want to go short, this will remind you, hey, wait a minute, let me make sure I get a closure below this because this is a strong weekly support level. Okay, and remember, institutional trading is happening at these higher support levels. Okay, so my goal for you is that you can chart this in your platform. So if you need to pause the video, so by the time you're done with this crude oil analysis, you can have a completed chart fully analyzed, and you can look at the support levels and resistance levels on the multiple timeframes as we go through the various timeframes. Okay, so we are now going to jump into a different chart here, and so we are going to now go down to the daily chart. Right now, here's something interesting that I want to show you, and we don't know if this is just a glitch on TradingView or have they already prepared for the possible gap, and that's going to be right in here. I'm going to pick a call signal. So you see this candle? This candle appeared, and we closed Thursday. We closed Friday. So this little gap here is a little weird. Okay, now this could be because of a contract change. We don't exactly know, but just keep in mind that you want to check your platform when the market opens at 6, not knowing if this is going to be an actual gap that was created or not. We're going to kind of ignore this for now because this is the Thursday candle and then this is the Friday candle. So this could be some type of price difference on futures contracts embedded into this chart. So we want to use caution and not assume that there's going to be a 300-point gap here. Okay, so that being said, let's now take a look at some of this daily support and resistance. You can see the resistance here, you can see the resistance here, and you can see the support right here. So what we want to do now is we want to go ahead and mark this as daily resistance. Okay, so hopefully again you are marking up your chart. Now for the daily support, well, this is kind of the same area as the weekly. Okay, so we really don't need to change much here. So now I can change this to daily and weekly support. So that's a pretty strong level right here, okay, because we have daily and weekly support down in this level. Okay, so again, we're going to have to wait to see what happens with the gap. And let me just kind of use this scenario right here to kind of explain to you if this scenario was to happen or any change in price from where price closed on Friday. Okay, that is kind of considered the actual gap. So if you are going to trade the gap, there are certain rules that I follow for trading the gap usually has to be 50 points or more. So basically a 50-point price difference from where price closed on Friday to where price opens on Sunday, to either side, to the buy side or to the sell side. Now, this is something that we commonly do every Sunday evening inside of our club. On Sundays, it's not a day to get into trades. The only thing we look for are for gaps, both on the Forex side and on the commodity side, the energy side, at 6 p.m. when the markets open, including the indices. So if that's something that interests you, if you want to learn how to trade the gaps, if you want to trade with us, just go down below to theprofessortrades.com. We got a plan for you. Come in on a trial today, if it's Sunday and you're watching this video, and you can trade with us live at 6 o'clock as well. So hopefully you can come in and get some massive, massive value. We would love for you to join our community. So we are going to have to wait to kind of see what's here. Now, we're going to kind of ignore this candle for this evaluation, okay? Because I really want to look at as prices moving right within these levels, and I want to start with some Fibonacci levels at this daily time frame. So I want to go from this low to this high, okay? So again, we don't know what's happening with this candle, but we are going to start looking, okay, at this liquidity zone sitting right here that was created back on Wednesday, August 7th. So if this does turn up to be true and hold up, okay, we are going to look for price to come down towards this liquidity zone, and then we are going to start looking for buying opportunities down at these levels down in here, which is about 71.60 to 72. Okay, we're going to start looking for price down in this level. I think with what's going on, we may see oil do one more, possible push down, and then are we going to see these levels broken, maybe flush out some folks down here, and then start the next wave all the way up back up to the mid 80s on crude oil. We shall see. And again, this is why trading in a community is much easier than trading alone, because you're getting updated charts. There's a lot of chat talk going on. We're looking at price action, and so we're putting you ahead of the curve, and it makes trading much, much easier for you when you get constant updates 2, 3, 4 times a day. So we are going to be looking to see what price does at this support level if it comes down, okay? If price comes down to this level to grab liquidity, early in the week, we usually will wait to see if they create the new low, okay, because this was the low that was created last week on Tuesday, if they come down here and break the low for the week, right? So we're going to be looking for lows of the week happening early, probably in the cycle of crude oil this week, especially if this gap happens here, okay? So things that we're looking for right up in this area. Now, as we drop down to the 8-hour, we start looking to see if we have consistency or congruence and what is happening with our charts here. Now, if we look across here at about 78.67, again, we're so close to this level here that we're probably not going to mark an interim level. It is a couple of pips away. So to protect you, I am going to mark this level, just because if you're here and you try to jump into a buy and price turns around on you, well, when you look to your left, what did you see, right? We saw that price reacted here, here, and here. So this is why sometimes you may think, well, why are levels so close to each other? Well, on an 8-hour chart, that's a couple of 100 points. So, if you're looking to scalp the market, right, if you're not looking to get trapped, you need to understand where these levels are at. So this is going to be an 8-hour, okay, resistance level that you can't ignore, because it's already giving you opportunities before where price has rejected. Okay, so very, very important. Now, as we look over to the left, we look for the same kind of congruence happening in these different levels. And again, as for a floor, you have to take a look at these different levels here where price has reacted before. And ironically enough, that is almost exactly where this candle is, if this is a true candle that opens below, because we can see here we've had both resistance and support to the bottom, and support to the bottom. So we need to mark this up as a possible 8-hour support level. And these levels are important for you to have for anything else, okay, that you are not trapped in the market trying to take a buy or sell near a support or resistance level, you always want to wait for at least, in my opinion, that 1 hour candle to close above that level, preferably a 4-hour candle, but at least a 1 hour to give an opportunity to either look for a break and retest or for some type of structural price action move if you're going to continue in that same direction. Okay. So now that we have these levels here, we can begin to look effectively for what may, or may not happen. So early in the week, and again, your charts should be marked up now. Okay. We are going to look to see, first of all, where the gap opens. So in this scenario, okay, if this scenario holds up to be true, then that particular area right here, okay, that particular area right here would turn out, and let me just grab a call sign. This would turn out to be the gap. Okay, so remember, any price difference, okay, any price difference between where the market closed on Friday to where the market opens on Sunday is considered and called a gap. And there's strategies for trading the gap, and we do those as we move forward. So now let's kind of drop down into our 4-hour chart. And now we begin to look for support and resistance levels on a smaller type of time frame. And again, when we look here at the 8-hour and the 4-hour, we're seeing a lot of consistency. We're not seeing, too many variances off of that. This could be one level right here that we want to look at because it had both support and resistance. So we'll mark this up in this case as a 4-hour, because it's dropping down, okay, a 4-hour support level. Okay, 4-hour support level. So now you begin to see, okay, and this is the beauty of having levels. Once levels are broken, you should be trading level to level. Okay. Now we have a kind of a 20 pip challenge, or, in that case, if you're on futures, right, 20-point difference, you're looking for price to go at least 20, secure, and then continue that runner going. But you want to go and you want to focus on level to level. Okay. Level to level works just like, you get a break here down here. This was a very simple, okay, break of structure, come back up and retest, and then you had the continuation going down. Another retest, another continuation down. So that's what price action is right there. So this is why having the levels as you drop down to smaller time frames could really assist you in helping you stay with the trade longer. But of course, you always want to go ahead and secure some profits along the way. So as we look at this now from a 1-hour perspective, you can see here, and let me kind of show you and walk you through, right? We had our daily and support levels here. We came back up to our 4-hour support. We rejected. We came back down to retest daily and weekly support, which is also a Fibonacci level. If I had a fib level there, and let me go ahead and remove this fib level so it's easier for you. Okay. Price came back up to this level, but here's the key. On this 4-hour level that was support, which is also resistance, okay, it broke and closed above the level, retested the level, and just came right back up to the next 8-hour, okay? Had a false move here, rejected, came back down. Here's the bullish engulfing candle, closes above this level, okay, and then continues up to where? To the next level, okay? This level closes, they go up to the daily resistance. We see rejection, we come back to this level. They kind of consolidate here pre-London on this level. They close below, they retest, they come down, they come back up to retest, and then we have this situation here happening. So you can see here why these levels are so important, and it gives you an opportunity to trade from level to level, always protecting your trades. And this is why I kind of preach the 2-entry rule, where you're going in with 2 entries, same risk. So if you normally would trade a 2% risk, you just go 2 entries, breaking those down into 2 1% entries. You secure 20 pips or 20-point price difference on futures, okay? And then you allow one to be a runner because you've now moved your stop loss into profit, so you are fully protected. Because even if you get stopped out on the second one a couple of times, you at break even, so you're not losing any money, and make sure you cover your spreads or any fees, so maybe a couple of points in profit. what's going to happen is on that second, third, or fourth one, you are eventually going to get a runner that's going to run for 30, 60, 90, 200-point difference, right? And then that is going to be a major payday and cash out. And then you're just trailing that as you move forward. So as you are looking at these levels right here, this is going to give you really an opportunity, okay, for you to have your chart marked up, okay, and begin to anticipate and look for price action at what may or may not happen within these particular levels. Hey, by the way, if you have been getting some value on this video, make sure you hit that like button, hit the share button, and subscribe if you are brand new, and hit that notifications bell. So as we begin to wrap up crude oil analysis here, we're going to be focusing it again on these different levels. We're going to wait to see what happens with any price gap that may or may not open. And again, we'll be live inside of the app at 6 o'clock to take a look at this. But at least for this beginning of the week, you have a nice starting point to look at these levels. And again, from what I can gather, we are going to always trade what we see, but it's still important to look at some of the fundamentals happening with crude oil and kind of keep that in the back of your mind. But again, I can't tell you enough to trade what you see. Do I believe we're going to see higher prices coming up? Yes, but I think they may flush some of the lows first before kind of turning it back around, back up into the 80s. Hey, thanks again for watching. And again, if you're brand new, love to have you join our YouTube community. Go down below, check out my channel, check out the other videos and analysis as well. Hit that like button. More importantly, subscribe and hit the notifications bell so you do not miss out on fresh analysis and live analysis as well. Have a great trading week. Be blessed. Don't forget to be kind to someone this week. We need a lot more kindness in our world. And secondly, remember that you can't serve two masters. Money should never be your master. Your faith and whoever your God is should be your focus along with your family. So make sure that you're spending time in your faith, growing yourself spiritually, growing yourself as an individual, because at the end of the day, you're never going to see a U-Haul truck in the procession to a funeral because you can't take this with you. We're blessed to have this opportunity, but at the end of the day, focusing on what really matters, which is your faith and your family. Thanks for watching and have a great week.